Welcome back. So, Ryan, you're a rare voice who hasn't seen a recession over every horizon. How long can consumer spending continue to prop up stocks and the general economy?
Well, that's right. We came into this year saying there wouldn't be a recession. We were quite lonely with that call. I see more people are coming on. And the main reason, as we've all heard, the consumer makes up about 2/3 of the economy. And the truth is the consumer is still strong. Consumption is still strong. It comes down to jobs, right? We made over 5 million jobs last year. Now we're coming back to normal. And people are saying, oh, the job market's weakening because we're making, less than 200,000 jobs a month now. That's actually fine with us. We're kind of getting, again, back to normal. So as long as jobs keep creating between 100 and 200,000 jobs a month, inflation keeps coming down, wages continue to grow faster than inflation. It's not a perfect scenario. We are fully aware of those delinquencies that are starting to go a little higher, auto delinquencies going higher, the student loan payments are coming back. So again, there are some worries out there. But bottom line is we don't see any recession over the next 12 months or the 6 to 12 months with the consumer still strong, in our opinion.
And why in this era of climate change and very dramatic climate events happening around the world do you like energy stocks?
Well, the bottom line there is we think, again, can avoid a recession. And you look at crude oil, right? Crude oil has been strong. We wouldn't be shocked at all if crude oil goes up to 100. That's one of the biggest commodities, obviously biggest parts of energy in general. And you talk about earnings, right? Earnings, there's a lot of earnings expectations there, and energy stocks are cheap. Think about this. Energy stocks are trading where they were in 2008. I mean, they've had this big rally, we are aware, the last 2 years, but energy stocks have gone virtually nowhere, which my math tell me they're about 15 years, give or take. We like that idea where there can still be some upside there, and only about 4% or so, 4 to 5% of the S&P is energy. So that's one of those underloved areas that we think there's still demand coming and an economy that can continue to improve. China's slowing down, yes, but the U.S., again, we don't think it's having a recession, so consumption should be strong when it comes to energy, specifically crude oil.
You're excited about small caps and opportunities there. Where should investors be looking in small caps?
Well, again, what we like in small caps, we like the cyclical names. So we like small caps, we like your small industrial, a lot of energy names are still smaller. So those are the areas that we would focus on. We're not as warm and fuzzy as some of the defensive areas, your utilities, your staples. On a relative basis, those continue to underperform. That's actually what you want to see in a healthy bull market. So we'd stick with some of those cyclical areas of small caps for some good gains the rest of 2023.
Thanks, Ryan. Thanks for coming in.
Thank you.
Get today's business news as well as the stories behind the headlines daily at QZ.com.